Hi traders, in today's video I want to talk about 3 signs that you are risking too much. So when it comes to risk management, this is of course one of the major keys a trader needs to master in order to have a long-term and of course a successful trading career. So when it comes to trading, whether it's forex trading, futures trading, or stocks trading, you have to understand that risk management, mindset, and trading edge, they all work like a puzzle. So let's say if you risk 10% per trade, which is very crazy, or you don't use the stop loss at all on each trade, even a positive mindset or a good trading edge can help you. You still risk too much. Of course, you may get lucky one or a few times, but the disaster is not far away from you, and it's the matter of time. So if that happens, if you hit a few losing trades with so big risk and so on, you must start all over again if you have a will, of course. So in this video I prepared 3 signs that you are risking too much. And when it comes to trading, as I always say, you must plan your trading for the next 5-10 years if you are really serious about your trading and your goal is to make a full-time living from the forex trading. You must really know why you're trading. And by planning and being serious, of course I'm not saying that you must be that serious and not smile during the day, but what I'm saying is that you must respect the market, and most importantly you must respect the risk management. Because if you won't do this, the markets, and I guarantee you, the market will make sure to humble you. No matter how good you think you are as a trader, every trader is the student of the market, no matter how good you think you are. And the fact is, the leverage and too big size and risk actually kills most of the traders today, because they're chasing the quick money. They have this wrong mindset, and this is very bad. Most traders, if we are honest, especially in the retail world, they just want to make an easy and quick cash, and that's actually of course the wrong approach and not a right trading mindset to have. Of course, with that mindset you can make some money here and there, but of course you will be also quickly out of your business. So that's why you need to focus on this risk, especially by assuming most of the retail traders are gamblers and they don't have any strict rules, of course, at all around daily trading plan, journal, routine, and so on. So the question is, are you one of those traders? So I want to give you 3 steps, not 3 steps, but 3 signs that you are those one of those traders, and those are those 3. So let's touch the first one. You can't sleep. So let's imagine that you opened a trade during the London session, but once you are in the bed you can't fall asleep, or you wake up in the middle of the night thinking, let's say, is my position going well, and so on. And I was there too. I was one of those traders in my early days, and this may be really the sign you are risking too much. So if you have this pressure, if you wake up in the middle of the night and thinking about your position, then of course try to decrease your position size on your next trade or 2 and see how you handle it. Maybe you are risking too much. So if you feel like, let's say, 2% risk is too much for you, then maybe try to decrease it, try to lower it to 1.5 or 1%, and see how risking that much affects your trading mindset. So let's say if your trading friend or buddy is fine risking 2.5% per trade position, that of course doesn't mean that you'll be fine too. So you have to find this spot that suits your personality, that suits your trading style. And as one of the best traders, Jesse Livermore, one of the best stocks traders, said it once, if you can't sleep at night because of your stock market position, then you have gone too far. If this is the case, then sell your position down to the sleeping level. So this is very important. And when it comes to trading, of course, every trader has his own mental trading capital and risk tolerance. So what is good for one may not be good for you, and only experiences will build your forex trading skin, style, and personality. You can't know if you don't try. The second sign that you're risking too much is checking too much. So let's say that you have entered into good looking long trade with supported technical factors, and instead of letting the market and your edge actually do the rest, you consistently and constantly worry about your position. So things such as you can't close the charts and go away, or checking the currency rate on your phone while you're outside and stuff like that, those are another signs you may be risking too much. So once you have a proven trading edge, once you have a proven trading strategy, and once you execute your trade as per rules of your trading plan, then of course you should not worry about one single trade, because you have to understand that one trade, it doesn't matter. Of course, you must still follow your process, your trading rules, but on the long term, your edge shows after 50 or 100 trades and so on. So one trade is just one trade in the series of your trades based on your trading edge, but you still have to follow your rules on it. The third sign of risking too much is exiting too early. So let's say that you spot a nice long trade opportunity on Euro US dollar, for example, as per your trading plan. You put your stop loss at, let's say, 30 pips. You set your profit target at 40-50 pips. Then of course you just and that's it. So you just go away on short walk around your city, let's say, and instead of enjoying the time outside, you constantly think about your open position, and you feel like the whole trading result depends on one single trade. So let's imagine that you come back in front of the charts and your trading position is running at minus 10 pips. And what you do next? Let's say you simply close your trade out of no good reason, because you act emotionally. So your only good reason, let's say it, was that you didn't want for the stop loss and price actually hit your stop loss. So you actually made your decision based on the fear. Of course, you may feel kind of happy because you cut your loss quick and, let's say, saved extra pips. But a few hours later you come back, you check the currency pair and the pair you had the trade on, and then you saw that actually price continued its way up in the major uptrend direction, and you will be of course in the profits right now, and then you feel bad. And that's something that a lot of traders do. Instead of letting the probabilities of their trading edge do the rest and actually let the market do the work by hitting their stop or profit target, they make their trading mistakes out of fear, out of emotions. And if you start making this kind of trading mistakes, you may be risking too much, and you must fix those things. So ask yourself honestly, are you one of those traders? Thanks for watching, and we catch up soon. Take care.